Hi. In this last series of REITs, I'm going to talk about how are these taxed. So, in case of REITs, there are two kinds of returns that you make as an investor. One is a fixed kind of returns, which is basis the rentals that gets distributed to the unit holders, which I explained in my previous videos. 90% of the post-maintenance rentals will get distributed to the unit holders in proportion to the investment which they have made in that particular complex or the commercial complex or the special purpose vehicle which is holding a set of properties. So that is part A, which will be taxed at your slab rate. If you are an investor who's in the 30% slab, the rental income which gets distributed will be taxed at your slab rate. And you have another kind of returns which is called the capital gains. What is capital gains? Let's say you are investing into a special purpose vehicle which is holding properties worth of 100 crores or 500 crores, and then over a period of 3 or 4 or 5 years, this 500 crores property becomes, let's say, 600 crores. Now, let's say, so there is a growth of 20%. So on the capital that you have invested into this REIT, let's say you have invested 1 lakh rupees, there could be a capital gains appreciation to the level to your investment, also to the extent of approximately the 20%, which has been the capital appreciation of the assets in which you have invested into. Now, when you sell these, this 20,000 rupees will be treated as capital gains because this is the gains apart from the rental income that you get. How are these going to be charged? If you are selling this on your own, if you have held these REIT units in mutual fund or ETF beyond 2 years, then it is going to be charged at your long-term capital gains, which is 12.5% plus cess. And if it is less than 2 years, then it is going to be charged at 20%. Now, there could be another scenario where the special purpose vehicle is selling a property on their own. And then in that case, also you are liable for capital gains because they made a profit while selling that. And you had a share in that property in which that is got sold. So in that case, if you have held the units for less than, because you don't have the control of when are they going to sell and what are the price at which they are going to sell. But if you are initiating the transaction on your own, you have the control for which the holding period is greater than 2 years for long-term capital gains. But if the trust is selling it on its own, then if you have held the units for more than 1 year itself, then it is long-term capital gains. And less than 1 year, this is 12.5% LTCG long-term capital gains. And if it is less than 1 year, it is 20%. This is how the taxation works with REITs. So please do follow this space for more updates. Thank you.